LOS 21A describe the role of financial reporting and financial statement analysis. Financial reporting. These are the methods used by a firm or company to explain its financial position and financial health. So these are the methods. Financial statements are prepared by management for the users of these statements. What are the users of financial statements? It could be management, lenders, government, analysts, investors. Actually, these are the people who make economic decisions based on these financial statements. So financial statements are made for these users. The financial statements. These are income statements, balance sheets, statement of cash flow, and other financial disclosures required by regulatory bodies or accounting standard setting bodies. Financial statement analysis. It is evaluation of a company's performance by using these published financial reports. The information in the statements and in disclosures is used by users to evaluate companies' current and past performance, to make an opinion about the firm, like whether or not we should invest in this company. Or on the other hand, a bank can think of whether or not they should lend to this company. Next LOS is 21B. Describe the roles of the statement of financial position, statement of comprehensive income, statement of changes in equity, and statement of cash flows in evaluating a company's performance and financial position. First of all, what is statement of financial position? Statement of financial position is also called balance sheet. It tells us the information about assets and liabilities and owner's equity at some particular date. Resources owned by company, these are called assets, and how these resources are financed are either by liabilities or by shareholders' equity. And these resources are owned by the company, which are called assets, are either financed by liabilities or shareholders' equity. We know that analysts use this information to evaluate the company. We know that assets minus liabilities is equal to a residual claim in the company by owners, which is also called shareholders' equity. Statement of comprehensive income. It shows changes in equity except for the shareholders' transactions. It means the inflows and outflows by the owner in the company are not included in the statement of comprehensive income. It generally has two parts, the income statement and the statement of other comprehensive income. Let's see what are these. The income statement. It shows the revenues and expenses from ordinary business operations. What are the ordinary business operations? These are the operations for which the company is established for. For example, if a company is established to do furniture business, any activity, any inflows and outflows and other activities related to the furniture are called ordinary business activities. Other activities like sale of property, sale of building, and sale of machinery are not ordinary business operations. Okay, inflows. Revenues. These are the inflows by selling goods and or services from normal business activities. We have discussed these. Expenses. Expenses are outflows from producing those goods and services from like purchasing of raw material and services, etc. Other comprehensive income. It shows the revenues and expenses from the unusual events. What are the unusual events? For the time being, these are the events which does not come into the normal course of business. Uh, like a furniture company is selling a building, or the inflows are coming from international uh, subsidiary company due to the exchange rate change, are unusual events. For the time being, we will discuss them in detail. For example, we have an example here: gains or losses due to foreign exchange rate change. So these are unusual events. Statement of changes in equity. It shows how the value of shareholders or owners has changed over time. We know that assets minus liabilities is equal to shareholders' equity. It is the total residual claims of owners into the company. Statement of changes in equity. There are three components of equity: paid in capital, the money received by the company by selling its shares. When we are selling our shares, the inflows are called, total value of inflows are called paid in capital. Second one is retained earnings. These are the undistributed profits. Sometimes, or most of the times companies do not distribute all of their profits. They retain some of it and distribute other one. These are used for the future investments or other economic needs of the company. Treasury stock. Sometimes. Emphasis is on sometimes, not all the time. Companies buy their own stock. It is the total amount given to the investors for buying the stock. Why companies buy their own stock? There are a lot of reasons why company buys their own stock. One main reason could be their stock is very much undervalued in the market, and they want to reduce their distribution of the dividend. They want to increase their dividend per share, so they buy their stock. Statement of cash flows. It shows the cash receipts and payments of company. It has three categories. Cash flows from operations. The cash inflows and outflows from main business activities or normal business activities, which we have discussed before. What are these activities came under this category. CFA, cash flow from investing activities. Cash received or paid from activities like sale, acquisition of fixed assets, like property, plant and equipments, etc., or investment in the other firms are called CFI. So all these investing activities came under CFI. CFF, cash flows from financing activities. Cash inflows or outflows from issuing or retiring of debt or equity securities. For example, we are issuing shares, so we have received some cash, that is a CFF activity, or we are retiring our debt, it means we are paying our loan. We are retiring our debt, it means we are paying our loan. So we have outflow of cash, that also came under the CFF. So it also includes payments of dividends, because dividend is a financing activities. We pay dividend because we have issued shares, which is a financing activity. So dividend payment is also a financing activity. This is end of the LOS 21B. I have a good news for you. You can have my ebook uh, for only $1. It is a pretty good book. It is that cheap because my aim is to provide cheap but quality educational material for all those students who want it. So the link is in the description. You can have it. Okay, thank you.